With gold spiking over the Christmas holidays, I think it is a very good time to speak to Brien Lundin. Brien Lundin heads up the Gold Newsletter. He's also host of the New Orleans Investment Conference. Now, Brien, you were saying in your talk today that you are a gold bull right now,
Yep.
but the spike over the Christmas holidays might not have been the best thing for the precious metal.
Well, we already had a rally underway. I had been predicting in Gold Newsletter that we were going to have the New Year gold rally begin kind of the second half of December, and it did. Actually, gold gained about 4% from about December 20th through the end of the year. First day of trading in January 2nd, we gained on the market. We had another up day, so the rally was in full force, and importantly, the rally was occurring for the right reasons. People were realizing that the monetary issues at play kind of demanded much higher gold prices. To wit, the Federal Reserve had essentially returned to quantitative easing, and that was really driving the price up. Then the missiles started to fly on January 3rd, and I was worried, and I was pretty vocal about it in the newsletter and on social media, that this posed the risk of temporarily derailing the gold rally, because people would get confused. They would think, well, gold was moving for these geopolitical reasons. And all of these little dust-ups around the world, gold spikes on them, and then things inevitably calm down. Gold goes right back down afterwards. And I tell people that's not the reason why you should buy gold. You can't predict these kinds of things. You can't trade them. And it's not anything that will support a longer-term, consistent gold bull market. Those are always due for monetary issues. Now, what happened was, sure enough, things calmed down. The gold price settled back, but surprisingly, and I think encouragingly, it did not give up all of those gains. It bottomed about $20, $25 higher than it was right before the missiles started to fly and everything kind of erupted. So to me, that's the sign that we're in a healthy bull market environment, and it's very encouraging to me. And there are a number of other things, and again, the monetary issues at play that, to me, make it look like we've got a long-term gold bull market that started, and probably at least another couple of months of a positive price trend, and then we'll just have to see where we get from there.
When you talk about monetary reasons, what are the fundamental drivers for the gold price?
Well, the big issue to me is the debt, the federal debt, and in fact, the level of debt in all the developed countries around the world. But just talking about the U.S., the federal debt is so large right now that we simply can't afford anything approaching normalized interest rates. It's the end result is a very small increase in interest rates, because the debt's so large, results in a very large bottom line impact to the federal budget. If the Federal Reserve, for example, would have been able to get the Fed funds rate up to 3%, which was their target when they were trying to tighten and trying to normalize, if they were able to do that, it would have implied, according to work that I've been doing, a cost of a debt service annually of close to $1 trillion. And that, to me, would have been politically unpalatable. At that point, people would have been talking, given the political environment, about why are we paying these high interest costs? Why are we paying these interest payments to these fat cat investors, to China, to all these other places, and burdening our kids with this debt? Why don't we just forgive the debt? If we ever got to that to that standpoint, the value of the dollar would crater, and that would be extremely bullish for gold. But the end result of all this is that we can't afford any interest rate that's essentially positive on a real basis, adjusted for inflation. In other words, the dollar has to be depreciated because the debt's so large. This is what's happened throughout history, so the dollar has to be depreciated. The rate of that depreciation is called inflation. So interest rates cannot be greater than the rate of inflation, or we get that hit to the bottom line for servicing the debt. And going forward, we are going to have negative real rates, negative real interest rates, really forever under this monetary regime, because of how things have been set up with the debt. That's enormously bullish for gold and silver.
What is your favorite vehicles to be tied to the appreciation in gold?
Well, I think everyone needs to own gold. They need to own physical gold. It's insurance for your wealth against all the events we see coming ahead. I think everyone should also own physical silver. Silver leverages gold, but it's also smaller denominations, and it's more convenient from that standpoint. I really like the mining equities. I kind of specialize in the junior exploration developers to leverage these trends. We know that sector, the right companies in a bull trend, an underlying bull trend for gold and silver, can deliver multiples of the gains in gold. So it's an area, though, I tell people you need to devote time and money and skull sweat to educate yourself. If you're not going to go do the due diligence, if you're not going to go to sites like Kitco, get the research, if you're not going to go to conferences, if you're not going to subscribe to the better newsletters out there, then just buy the indices, the GDX, GDXJ, and leverage yourself a bit. But if you do the work, if you do educate yourself and take the time to learn the sector, it's not the most efficient sector. So you can find some opportunities that can really build wealth very rapidly.
We appreciate the mention, by the way, but I also want to talk about what are the other precious metals looking like. I mean, there's been, we've seen the platinum group metals going nuts, although that could be a mix of what's actually happening on the manufacturing industrial basis. We've seen a kick up in silver. I even checked my phone. I saw even Bitcoin was doing something as well too. So how do you like all of these sectors shaking out that are around gold?
Well, the PGMs, platinum and palladium, are known as monetary metals as well, but with a big industrial component. I think what's driving them right now is the industrial component. Where everybody's talking about the electrification of transportation and lithium and copper and everything else, but they don't realize is that we're going to have internal combustion engines for a long time, and that there's a real supply squeeze going on in the PGM. So I think that move that we've seen, very positive, and very rewarding, is more because of those issues. It's more the industrial issues. A lot of people look at silver and say, well, you ought to buy silver because it's also a bit of an industrial metal, and that would kind of cushion the downside. And I've never been a believer in that. I don't think the facts bear that out. I think if you remove the monetary component from silver and looked at it as purely an industrial metal, it would be selling for under $5 an ounce. I think all of that, and perhaps more, is due to the monetary uses and factors for silver, and that's really the reason to buy silver. So I tell people, if you like gold, and you should, then you absolutely have to love silver. It is a natural leverage to gold.
Lastly, you said something interesting about not only will the hike in gold prices show more attention on the juniors, but that's going to be helping the junior industry as a whole. If you're a zinc miner, or I should say you're a zinc explorer, you're a lead explorer, whatever else have you. Yeah,
if you look at the bull market, the great bull market of the 2000s, we had many bull markets in there. We had a rare earths bull market. Copper did fairly well. We had a uranium bull market. We had all these other little sectors that kind of, and were very profitable and rewarding in their own right. But I firmly believe there's no such thing as far as the equities go. The commodities are a different thing, but as far as playing the equities in a particular resource or metal or mineral, there's no bull market in the equities unless there's an underlying gold bull market that attracts speculative investors to the metals in general. And then as they keep looking for more opportunities, and they hit upon other sectors, ancillary sectors like we saw rare earths and uranium and the like. So yeah, I think there's a lot of opportunity in zinc exploration companies, copper exploration companies. I think that for them to really get going, we have to have that underlying bull market in gold. But the good news is I see that happening right now.
Thank you very much. I've been speaking with Brien Lundin. He heads up the Gold Newsletter and also is the host of the New Orleans Investment Conference. When is that coming up?
That is October 14th to 17th in, of all places, New Orleans.
Sounds like the weather's better that time of year.
It is. It's wonderful, actually.
Yep. Great. Thank you very much.